Good morning and welcome to another edition of Roadhouse Live. We are live. Today is October 10, 2023. You heard that, Bender. October 10, 10. We're third through the month of October, whether you like
Dude,
it or
this is
not.
going way too fast. So I have a birthday this month, and it's the 1 month that, like, as time kind of screams by and it gets closer, I'm like, holy shit! Like this month is just flying.
It's just,
I don't know.
right?
It's crazy.
Yeah. Yeah. It's moving, man. It's like, so when we start seeing that 2024 flow, it ain't that far away, man.
Yeah,
It's like, it's
time to
not.
start paying attention a little bit to it.
It's while it's further dated, it is not really further dated. So that makes it a little bit, I don't know, more fun, maybe not fun, maybe who the fuck knows. What we do know is we're basically flat-ish from yesterday into today with very few headline, very little news, very little data, very little. Japan had a good night. Europe had a good day. China had a good whatever. Uh, Whatever the conflict is that's going on over yonder is still a conflict. They're still throwing hot rocks at each other. That's probably going to be the way that is for a minute or two. Oil and crude, it's like you did have that big pop yesterday, and it's flat-ish to pulling back now. So what do you do? I think yesterday the big story was defense stocks. And I think defense stocks is kind of a stupid word. I think yesterday the big story was stocks that make weapons. It just makes more sense than saying defense stocks. Um, Weapon stocks did pretty well. Let's see how that plays out into today. And we are right back into that shuffle, Bender, that big shuffle that everybody loves so much. Earning season. We got banks and we got some other stuff going on today. Not today, but this week. So the pressure appears to be a desire to push to the upside. It did look like it hit its head up against a wall last night, but looking at it, if you're going to be an honest broker, it needed some type of a pullback, some type of a rebalance. I don't know if they got it this morning. I don't know if this is it. It's like SPY stayed above the 200 on the 3 minute for all this little shake and bake. Was that it? Maybe. Maybe. The other thing that I'll say is there's more and more banter, if you will, and more conversation as far as rates have peaked. And I think you were saying the rates haven't peaked, basically within a 25 basis point margin of error. I think you're a little bit out there for the near term. Just a little bit out there, a little bit. So if rates have peaked within that 25 basis point threshold, and we're going to all-time highs, dude. It's like you said it on Friday, the low is in for 2023. Right?
I did.
And I would venture to say that based on some of the flow that I've seen and the reaction off of yesterday's lows kind of says, well, hey, you know what? They're sure as fuck our buyers down there.
Yep.
Somebody buying down there. Now, somebody could be distributing up here, but down there they were buying. So that kind of begs the questions in a lot of ways as far as ultimately what's next, what needs to happen on these charts, what do we need to see through data? Again, it's like you have an ER season that I think that the question also has to be asked, Bender, once again, what is and is not priced in? Right?
Yeah, yes.
When it comes to
and
corporate
no. Earnings. Yeah.
Because look at some of the.
We're in a weird time of the the next 2 months. This is a weird kind of time of the year where, I think some of that sort of what is and isn't priced in, it has a little bit less of an impact in my mind because there are other things at play, right? There's sort of we went through the OPEX cycles throughout the year. We're coming into, from a seasonality perspective, where some of the volatility tends to drop off. You get that sort of VIX melt effect, which can, relieve some of the pressure. And just from a bigger picture view, there tends to be less selling. It doesn't mean that there's going to be more buying, but the bets that were made to the downside for the majority of the year tend to fall off, and more often than not, those bets don't get replaced this time of the year.
So you're basically saying what I was getting to with that, especially if you look at industrials, you look at things like industrials, airlines, some of the software names. A lot of these names are really, really beat. It's like you're going to short Southwest Air here, you're going to sell it off here when it's under what was like 27, 28. I don't know where it's at, but it's under 30. It's like you're going to sell Delta here after an almost 20% pullback. That's why when I say it's like coming into these earnings, a lot of it was a Bank of America. Is Bank of America going sub 20? So it kind of lines up with what you're saying in a lot of ways, that we've had a pretty substantial pullback in different sectors. It's like Tesla isn't over 300. NVIDIA isn't over 500. Apple isn't over 180. So again,
that NVIDIA should be over 500, but that's a conversation for another day.
Look, that's depending on whether or not you actually place a valuation on growth, or if you're just like, well, what's PE is this? It's like, look at GE. It's like, come on now. It's like it's a story for is Intel over 40? Is Microsoft over 350?
Right.
It's like, so that's forget about, is AMD over 110? Is Micron over 70? 75? It's like that's, I think, and I'm not really trying to support your narrative. I'm just pointing to the things that say it's like, okay, so what is and what is not priced in? And I think that's where it starts getting interesting when you go into corporate earnings and you come into, because we have a pivotal corporate earnings, which they all are, and we have, the dollar that rocket shot and looks like it wants to melt. You have the VIX that rocket shot and looks like it wants to melt. You have earnings that not earnings, but rates within a margin of error have peaked. You have data slowing down, which leads to like a more calm market in a lot of ways. This feels like fucking just grind, like a melt grind is what it feels like. But we'll let the earnings say, and we'll obviously let your chart speak, which they always speak. So you want to speak it?
Yeah, let's speak it. Let me get the share up here. Let's take a look and see what we got. Okay, so let me back out. This is a 15-minute. Let's start with the 4 hour, because we've been talking about that quite a bit. So what I'm looking at on the 4 hour, this was that level at 43.71 area where we were talking about getting that longer term market structure shift, right? You had it down in here, but I really like this level being taken because that's what formed that bottom at 42.36 was this leg right here. You could play it here, potentially here, but I really like this one to get taken. We took it, we've poked our head above it, right? But we haven't gotten this kind of candle yet, that big power candle through it. And that's kind of what I want to see. Not to say that we haven't already gotten that that market structure shift, because I think we have. I talked about it on Friday and then again yesterday. I think that has occurred. You've got this 4-hour fair value gap here below, and I've marked the midpoint from yesterday's low to high is right here at 43.40.25. And I want to highlight just kind of where this fair value gap is at, because when we move into the 15-minute, we're going to talk about it a little bit as to what we might look for if we do get a pullback. As far as upside moves, 43.84.25 is this high right in here. You can see we took the 43.71.25 highs. So next we're looking for it to take 43.83 half. And then this high up here, 43.99.75. And you can see that was also previous swing low, right? So when you kind of look at this on the 4-hour time frame, you can see, okay, this was the swing low bounce. We broke that. It became resistance. And then we made our low. Now we want to see it back above 4,400. And then we've got this 4-hour fair value gap in here. We have this existing regular trading hours gap, actual gap that's still hanging out up there. And then 45.66 puts us above this swing high before the drop all the way down, before this entire leg. So the other thing we should probably keep track of is the midpoint from this high to this low, and wouldn't you have it, it lines up with 4,400. So wanted to point all that out. Now if we go to 15-minute, what we see is that we have relative equal lows, double bottom, sitting down here, 43.66.25. A break below that is where I would be looking for a reaction to see if we get that quick wick back up. But this is where that 4-hour fair value gap starts, was 43.62.25. So you can see that a break below 66.25, you only got 4 handles before it takes out this candle's low, which puts us inside of that 4-hour fair value gap. So I'm going to mark the bottom of the 15-minute fair value gap right here, 43.45.75. So somewhere in here is where I would be looking for, if it breaks those relative equal lows, takes this, you don't get an immediate reaction, kind of this area in here is where I would be looking. Ideally, this stays open. Doesn't mean it will. Ideally, it does. And then you've got buy side liquidity sitting up here at 43.81. So let's see which one of these gets taken first. With these relative equal lows down here, kind of makes me think that they're going to want to go down and grab that. What they do with it from there, it's where you have to zoom into your 30-second, 1-minute charts and try to get a hat tip, a nod for direction. We are now seeking liquidity higher, right? So the move is up. We find pullbacks to buy. It doesn't mean you can't short and take advantage of some moves down, but for me personally, I'm not really looking for that because I don't want to fight. I don't want to be swimming upstream, so to speak. So I'd rather look for areas that I might want to buy by pullbacks. When you get those pullbacks, that's where I'm looking at those shorter time frames. When we pull into a fair value gap, then I'm looking at that 30-second or 1 minute chart, trying to look for that pattern, that formation for that market structure shift. Again, 43.99 being the big number for us to cross. That takes out that what was that previous support and then became resistance, and then we can start pushing higher. I think if at this point, really to kind of invalidate this whole scenario, right, we'd have to find ourselves back below 4,300, and that's 73 down from here, 74 points down from here. So that'd be pretty big. Doesn't mean it can't happen. You never say can't, and there's no guarantees, there's no absolutes, but by my eye and given the time of the year and everything else, I think the push or move is going to be higher to take out some of this stuff. Did I miss anything? Hells, what do you think?
No, I like it. I do. It's like until flow changes, it is what it is. We do have Fed speakers popping off left, right, and sideways. We are data light today. It's like the concept as far as wanting to chase liquidity higher. It makes sense considering that we, double tapped the same zone in the past, couple of days, and we went full send to the upside. So it's obvious what they're chasing, right? Isn't that how that works?
Yeah. Yeah.
It's very obvious what they're chasing. Look, and here's the thing: whether you agree with it or not, and this is, it's like, what's the biggest thing that fucks people off, right? Being too smart, being too ahead of the action.
Yeah.
Okay, you could be 100% totally correct that we're going to go down and test 4,100, right? You could be so right about that in every capacity. But you know what? We might need to go to 4,500 first.
Right. Like,
yeah,
I mean, you could be completely correct about what is going to happen in the housing market or, the workforce or anything else. But at the end of the day, having the right idea at the wrong time is very expensive.
Very expensive. And it's like, even if it's like the housing market, I'm glad you brought that up. And as far as some of these home builders and different tickers, they've been throttled over the last several months to the downside.
Yeah.
They're about to report again what is and is not already priced into the mix. When Boeing reports, is Boeing going back to 150, or is it going to make or not 150? I don't know what fucking number is it. 150? Yeah, is Boeing going back to 150, or is it going to scream over 200?
I think that's all dependent on whether or not another plane falls out of the sky. We know that.
It very well could be that, that individual piece, but it's like when you're looking for death and destruction, go back and look at some of these individual tickers and be like, well, fuck. Where are they going? Yep. What are we doing? And if you think, in all honesty, that the Fed is going to allow us to fucking fall into a recession in an election year, you're really fucking dumber than I thought.
That's the other thing. Yeah,
it's like you really are dumb as fucking rocks. Does that mean that we can't rip back down to 410 and then blitz back up to fucking ATH by midsummer? All that's in play. But sure. But they can go ahead and move that needle. All it takes is Powell coming out and saying, 3 to 5 simple words. Rates for this environment have peaked. We have successfully been able to do X, Y, and Z. Dude, just the liftoff that this market will have, there will be no stops in between. That's all it takes is one man jawboning. One man can jawbone it immediately. Any deviation from higher for longer we'll send fucking candles to the upside. So you can be right. Fuck it. Let's call it ES 2200. You can be right. Okay. Doesn't mean we're not going to ATH first. I don't have anything else, Bender. I don't have anything else. It's like we're gonna let this bitch open and look at flow and see what happens. That's all I can really say. I don't think we have Sunny. I don't think we have. I think Stonk's going to be back at some point today.
Yeah, I think he said he was like sleeping off his made-up hangover or something.
Well, and I think that's what happens when you eat too many cucumber sandwiches. It's like with those. With
Everything has its impact. We'll have to talk to him about moderation.
It's just like, who knows, man? Maybe do you think there's a chance that he went, full ham, that he actually went for it?
Well,
or do you think that they were
his full ham and, mine or yours are different things. So
then, he was probably doing Hallmark puzzles in the hotel room at 3 a.m.
I wouldn't go that far, maybe some, maybe strip bridge, but you got to keep the undergarments on.
Bridge. Wow. I like that. I definitely like that. All right,
a cup of tea.
16 minutes till open. Man, I miss Stonkington. Let's have a good day today, man.
All right. See you soon.